Welcome back to this special edition of Your Money, Your Call from the Australian Stockbrokers Awards. I'm Julia Lee from Bell Direct, and in this second segment we're talking about individual stocks and we're taking your emails. So the phone lines are closed. Joining me in this second segment we have Matt Felsman from APP Securities and also Chris Conway from Ascot Securities. So a pleasure to have you in this second segment. We've got plenty of emails to get through, so let's go to our first email. This one's from Alistair in Adelaide. And he's asking about Flight Centre. Now, this has been a bit of a funny stock over the years, down, up, but it seems to be on the up and away at the moment. And he wants to know about the movement of this stock, especially in the short term. So, Chris, looking at Flight Centre, what do you think?
Sure, Julia. Well, I'm a little bit like you. I don't mind looking at technicals as well as fundamentals, and I saw the close on Flight Centre today and actually managed to close above a pretty important resistance region around 37.50 or 38, I think. So technically it's quite strong, but I can't escape the fact that the last couple of times it has reported quite poorly. There's a lot of competition in the space, and that's driving down obviously ticket sale prices and crimping Flight Centre's margins. So I'm a little bit torn on this one. I do like the technicals, and as I said, it looks reasonably strong, but fundamentally there's some red flags.
I have to admit, I'm with you there. I actually hold this one in my portfolio, and it's been rising and rising. And it's hard to look at the fundamentals because so many times it's come out with a shock to the downside when it's come out with earnings. But, you know, the momentum does seem to be there at the moment. Matt, what's your view on Flight Centre?
I think the ideal time to have owned it would probably, if you could pick a time, would have been from 2009 to 2014. In those 5 years, the stock went from $5 to $55. So, I mean, you could argue the best is behind the stock based on where it's trading now. And there's so much divergence between where analysts and, broking houses and at investment banks, where they actually value the company's share price. It ranges from $25 to $36. So it might be in the bit of the too hard basket for me. If I owned it, I'd probably be more inclined to sell it as it's closer to the higher valuations. And if I didn't own it, I probably wouldn't be buying it.
Okay.
The stock's put on, 15% in the last 12 months. And the big thing for me, and this will probably direct the share price movement over the next sort of short term, or based on what the question was short interest. The short sellers in this stock have put on, I think, accelerated by 30% in the last 3 months. So it's the 10th most shorted stock on the ASX. It's probably higher end of valuations for me. And it's a little bit hard to put your finger on. No one's got a real high conviction that I can kind of agree with.
Okay, so putting you both on the spot here, when we look at some of those tourism holiday type of companies like Mantra, Ardent Leisure, Village Roadshow, Qantas, Virgin, and even a stock like this, Flight Centre, there's a huge divergence. You can even throw in corporate travel into the mix as well. In terms of performance, they're either great performers or they're terrible performers. What's your view on this sector? Do you have a favourite stock amongst some of those ones, Matt? What do you think?
Look, I think it's... depending on the currency moves and depending on some of these key areas, it could be a stock that comes back into focus. There has been a lot of stocks that have disappointed of late. Mantra is a great example. One we hold that we're actually quite positive on is not quite in the sector, but is in leisure, and that's Aristocrat Leisure, ALL. Which has just enjoyed a nice little upgrade cycle. So we're letting that run out at the moment.
Always nice when you've got earnings momentum and price momentum happening as Aristocrat Leisure does. How about you, Chris?
Yeah, in terms of the tourism story, I think Webjet would be my preference over Flight Centre. And another stock I like, it is a bond proxy, but Sydney Airports as well. I don't mind that exposure, and again, it's tied to the Chinese or the strong tourism from China and the strong tourism numbers or the strong passenger numbers they've had recently. So they'd probably be my two on this theme, I guess you'd say.
Okay, it's time for our second email, and our second email is about Brambles. It's been moving sideways of late. Is there upside for this stock? And Matt, you mentioned currency movements, and Brambles one of those ones that tends to be swayed along with where the currency is going. Given where the Aussie dollar is and the outlook for the Aussie dollar, what's your outlook on Brambles?
Well, when I think Brambles and sideways movements, I think it has traded from $9.50 to $10.50 in the last, since about April. But the thing that stands, I don't own it. The thing that stands out for me is the big downgrade we saw at the start of the year, where it went from, this time last year the stock was at $13.60ish. Its all-time high is about $13.80. So I would argue there's probably more inclined to, it's not trading sideways, it's on the way to further declines. I don't know. I don't feel they've addressed some of the concerns that were raised. A big thing for me that I can't get my head around is every week we hear the word Amazon now. And digital disruption, and people are no longer going into the stores to take things off the shelves that were delivered to the stores on a crate built by someone like Brambles. So I think I'd really need to hear a positive corporate investment case on that area, and maybe some of their business in the US that they raise some of their flags with. I think there's a lot of room for disappointment here. One other point I will just mention is that people have actually started to short this stock now. So there was no one was short in January, and now there's about, I think, 1.5% of the registers short. So it might be the next Amazon short, death by Amazon type trade.
I mean, a couple of good points by Matt. Firstly is that, once we see a downgrade, usually that's the start of a cycle. So do you think Brambles is in this downgrade cycle? And secondly, usually with the sideways movements, the longer it goes on for, the more severe the breakout. Do you think it's going to be to the upside, or are you with Matt? It's going to be to the downside.
I'm definitely with Matt on this one. I'm definitely a firm sell on Brambles. As Matt pointed out, there was the downgrade, but that was followed up again about a month later with the actual results, and it fell again. The price action has recovered to that initial breakdown point, but it looks as though it's beginning to roll over once again. And just in terms of the consensus estimates are suggesting revenue growth of about 10% in the fourth quarter. The year-to-date growth is about 5%. So they need to pedal very hard in the last quarter to make up that difference. I don't think they can. So I think it's setting up the situation where they miss again, and probably another big belting on a downgrade.
Doesn't sound good for Flight Centre. Sideways movement at the moment, but both our panellists seeing a breakout to the downside for this particular stock. And finally, we have QBE, looking at short to medium-term movements from here. Now, we know that earlier we did see QBE coming out with a profit downgrade because of some of its claims in emerging markets. However, is this an opportunity for investors and traders, or is this one you should avoid? The macro factors seem to be moving in QBE's favour. Chris, what do you think here?
Yes, I'll take this one from a purely trading perspective. It did actually put in a nice pin bar today, so a pretty strong reversal candle. I think there was 4 brokers that came out today, Macquarie, Morgan Stanley, and I think UBS reiterating their buy with price targets sort of 13.50. You're right, there are some macro factors that should help it in terms of rising US interest rates. So yeah, for a short-term trade, I would be happy to take a punt on this one. Have a pretty tight stop, I reckon, because if it does go south, you don't want to be holding as it craters. But I think, yeah, there's a bit of upside in this one.
Okay, so liking QB, I mean, it's an interesting one because the macro factors do play a big part. And while we have seen US interest rates rising, we've seen sort of that high yield trade back in focus because of what we've seen in terms of bond movements. So QB insurance, short term, what do you think, Matt?
I think, well, obviously when a stock gets downgraded, it usually takes a little bit to play out. So if you want to look short term, I think there's more downside ahead. As price targets come down, models are revised.
But when you see the brokers coming out with buys, despite the downgrade, what do you think?
Well, the stock's put on, in the last 6 months, has gone from $9 to $13.50. So that's 50%. If you hear the word downgrade, you need an excuse to lock that in. I mean, I think it's, if you want to buy the stock, you can wait a little bit longer. And if you hold the stock, you might wait for a little bit more guidance that they're going to be giving in August on their full year results. What you have to determine is whether this is, I mean, it's the best type of downgrade to have if you're an insurance company, a one-off weather event that's got nothing to do with management, or, are they, as a turnaround story, hit a snag? Is this typical QBE, disappointing investors? And I mean, it's a bit hard to tell right now, but I'd be waiting if I owned it, and also if I wanted to buy it. I think short term, might see some further movements downward, but we need to figure out whether this is a one-off or it's more of a longer-term thing.
Okay, it's a good point. QBE hasn't had such a great track record in terms of surprising the market on the upside when it comes out with its results. So I guess our panellists A little bit dour in terms of QB and maybe waiting for those August results to get a bit more of an outlook, although Chris is a bit more positive in terms
Just
of
as a
the
trade.
short-term,
Just as a trade, yeah.
short-term trade in terms of the technicals, and pointing out that the brokers are pretty positive as well. We don't have a lot of time left, in fact just a minute left, but Chris, I'm going to put you on the spot.
Sure.
You know, our viewers often like some ideas in terms of stock portfolios. So in terms of a tip perhaps or a favourite stock that you're watching at the moment?
Yeah, so there's two I really like at the moment. One is Macquarie Group and the other is Transurban. Transurban, they have their I-395 toll road. They've just released some projections for in the US. I think they're a little bit conservative, so there is a possible beat there. And if Trump does get his infrastructure plan off the ground, there might be some state toll roads that they can buy as well and snap up at a good price and become turn more profitable. So, like TCL, on the Macquarie side, I really just like the way they run their business now, an annuity-style business that generates most of their profits from their infrastructure assets. So, yeah.
And we've run out of time for that second segment as the clock ticks down for the Stockbrokers Awards, the industry's night of nights. We've had a fantastic second segment and we've had Chris Conway from Ascot Securities as well as Matt Felsman from APP Securities. Our next segment will be the Exchange Traded Fund segment. There's plenty of new products, so let's find out the outlook for some asset classes as well as some of those new exciting products out there on the market. We're going to go to a very short break. Stay with us.